Hi, today we are going to discuss about SF520. So the title of SF520 is Analytical Procedures. Let's start. So what we will learn in the standard. So basically, what we're gonna learn is like what is an analytical procedure. So and the second thing which we're gonna learn is how do we perform an analytical procedure, like how we actually perform an analytical procedure. Like there are two methods like comparative method or getting a relationship method, or the third thing which we're going to learn is how many times we perform analytical procedures. So actually we perform three times, like planning phase we do one thing, and substantial phase we do one thing, and final phase we do one thing. So these three times we do the analytical procedures, but in this standard we are only going to deal with these two things. So and finally, what should we have to do with the results, like after performing analytical procedures with the results, what we have to do, that we're gonna learn today. So these are our major objectives to learn in the standard. So let's start. So the first thing is, what is an analytical procedure? So when you heard this analytical procedure, there are a lot of confusion for a lot of students. So for that, uh, see, the analytical procedure is the evaluation of financial information. First thing is, you have some financial information and you're trying to evaluate it, like you're trying to understand it. And for that there are different methods. So for that, analytical procedure is one of the method where you understand the financial information through analysis of any other financial data or non-financial data. Like you have one financial information and you are understanding by analysis of other financial data or other non-financial data. And what we are analyzing in these two things is to find any plausible relationships. Like any plausible relationship means any kind of useful relationships. It's like if there are any meaningless relationships, we are not going to consider that. So when we are understanding any financial information with another financial information or non-financial information, if there are any useful relationships, that we're gonna consider, and that results we're gonna take it. So that is an analytical procedure. So understanding a financial information by using other financial or non-financial data, by developing some meaningful relationships between them. So like uh, any kind of comparison between financial and financial data is a analytical procedure, or financial data versus non-financial data is an analytical procedure. So for financial data versus financial data, we used to see like sale trends, whether they are increasing or decreasing, or how much is the bad debts versus how much is the revenue, like which how much percentage is the bad debts of revenue. So this is like financial to financial comparison. When you are doing financial data to non-financial data comparison, like how much payroll cost is happening and how many number of employees are there. Like payroll cost is increasing every year but number of employees are decreasing, so there are some question marks in this thing. So this is an analytical procedure, like in a simple terminology. Next, so how many times we perform the analytical procedure? So generally three times, we already discussed it before. So the first thing is like planning phase or preliminary phase. In this phase we are going to do analytical procedures. But why we have to do analytical procedures at the beginning of the audit? So at the beginning of the audit, auditor doesn't know anything about the company or doesn't know anything about what to perform, how to perform. So if you do any kind of analytical procedures, it will help him to understand the business. First point is he had to understand the business, so that he has to do an analytical procedure. And after understanding the business, he also has to plan the nature, timing and extent of audit. So what is the nature means which kind of audit procedure he has to do. Timing is at what time he has to perform, like year ending or middle or year end, or extent, like how much samples he has to take. So for all these things, this preliminary and planning phase analytical procedures will obviously help him. And the second time he is doing is a substantive analytical procedure. This is a very important analytical procedure as an auditor do, because it helps auditor to gather audit evidence. So the entire audit depends on the audit evidence. Like if you gather proper audit evidence, then only you can give the opinion. So this analytical procedure will help him to gather audit evidence. So this is very important. And finally, final conclusion or analytical procedures. So it why we do the final analytical procedure? Like we did a preliminary analytical procedure, we did a substantial analytical procedure, and now we are doing a final analytical procedure. So final analytical procedure obviously help the auditor to have an overall review of the financial information at the end of the audit. See, in simple terms, see what the auditor understood in the preliminary analytical procedure, and the auditor gathered some audit evidence during substantial analytical procedure. Whether these two are consistent throughout the audit or not, he has to finalize one time, like one last time he's checking, like when you are leaving the house you are checking the key whether it is properly or not. So like that he is checking one last time. So these are the 3 times where we do the analytical procedure. And finally let's come into the actual standard. So what is the objective of this standard? So like I said, we are going to discuss only about substantive analytical procedures and conclusion analytical procedures. So this standard only talks about those two analytical procedures. So what is the first objective? The first objective is to obtain sufficient and appropriate audit evidence. Like we already discussed, substantive analytical procedures is performed to gather audit evidence. So which audit evidence? Sufficient and appropriate audit evidence. So this is our first objective. And the second objective is that, like I discussed before, to final that the financial statements are consistent. This is very important. Whether consistent or not with auditor's understanding. See what he understood, whether it is consistent throughout the audit or not, he has to finalize it one more time. So for that he used to do the conclusion analytical procedures. So this is the objective of the standard. Next, so now we will discuss how to perform. So now we know what is an analytical procedure, and how many times we do analytical procedure, and what is this standard actually talks about. So these are the basic things we learned as of now. And finally now we are entering into how to perform. So there are actually two methods. One is comparing the data, and another is finding relationships between the data. So in comparing the financial information, we have different kind of things. Like we can compare the financial information with prior period information, like previous year data. So whatever the financial information which we are having, we can compare with the prior year data, or any forecast, like any future data, like any anticipating kind of data, like future kind of data we can compare. And finally any kind of similar industry information, like when you have a similar industry information, you can compare with the financial information. This is the comparison method. This is the first method. And in the second method, we are finding relationships between two data. So whether we can use that relationship to identify pattern of trends, like any kind of trends which we are observing, that whether the sales are increasing or decreasing every year, or to find a relationship between financial and non-financial data, which we already discussed, like payroll cost versus number of employees, whether the payroll costs are increasing and employees are decreasing. And finally you can do a simple small comparisons, or very complex analysis. It depends on the complexity of the audit and the judgment of the audit. It's entirely purely judgment of the auditor. So this is how we perform an analytical procedure. Either we can compare, or we can consider the relationships. So next, now we'll study about the substantive analytical procedure. So substantive analytical procedure, we actually do it to gather audit evidence. We already discussed it. So while gathering audit evidence, auditor has to be very vigilant, very careful. So for that, what auditor should consider while performing this analytical procedure? So first thing is, so he is comparing two data. So first he has to understand the data reliability. So whether the data which he is using is correct or not, he has to be very sure. So for that, first he has to find out the source of the data, like from where that source of data is coming. And the second thing is comparability, like auditor has one kind of data and he is comparing with some other kind of data which they are not even matching. So this is obviously wrong. And the third thing is relevancy. Auditor wants some kind of comparison, but that data is not even useful for him to compare with that data. So whether that data is useful for him or not, that is important. And final thing is controls over preparation, like the data which he got, when they are making the data, whether the controls are weak or not, whether the controls are strong or weak. If the controls are weak, obviously they can manipulate the data. If the controls are strong, then auditor can place reliance. That is the first thing auditor has to check. Second thing is auditor has to develop an expectation, like he has some experience, and when he is doing and he observes some kind of expenses, like this, there are 100 rupees of expenses, but based on auditor's experience he develops some expectations that generally not more than 50 this kind of expenses. I see in my previous audits, I have experience, or this kind of companies generally 50 rupees is maximum expenses. So he will develop certain expectations, and then he compare expected amount and recorded amount, and if there is any difference between it. So he is expecting 50, but they are showing 100 rupees of expense. So whether the difference is acceptable or material. So now for example, see, auditor thought that 10 rupees is material to him. So the recorded value is 100 and expected value is 50, so there is a difference of 50 rupees here, but his materiality is 10 only, so obviously it is material, so it is not even at all acceptable. But if auditor thinks that 60 rupees is material, he can tolerate 60, then the difference between recorded and expected value is only 50, so it is less than materiality value, so he can accept it. So this is the third thing he has to remember. And final thing is, well, when he is doing a substantive analytical procedure to any assertion, so assertion is for like balance sheet item or PNL item, any kind of item. When he is doing a substantive analytical procedure, he has to check the suitability for that, like whether this assertion for this assertion this kind of analytical procedure is suitable or not. He has to see that. So this, while he has to doing a substantive analytical procedure, the auditor has to consider. These are the major things. So next is the final or conclusion analytical procedures. So here the auditor will design and perform certain analytical procedures. So why he do it? He do it just to conclude that whatever the financial statements he has are consistent or not, like we are discussing from long time, that whether they are consistent or not with the auditor's understanding. So what he understood in the beginning of this audit and what he had as of now, so whether they are consistent or not at the end of the audit. So he is comparing the start of the audit to the end of the audit, whether everything is consistent or not. If it is not consistent, then he has to do certain other audit procedures. So this is the final analytical procedures. And finally, what should we have to do with the results? So this is a big thing. So like you are comparing one data with another data and you find some differences, then what we have to do? So first we have to investigate the differences. So why it is happening? Then what we have to do as an auditor, you have to ask management, why is the difference happening, like what is the reason for the difference. You have to inquire management. If the management is not responding, then what you have to do is you have to perform other audit procedures as appropriate. You don't have any other option. So with this, SA 520 will be completed. So if you like my video, please like, share, subscribe. Thank you.